What's up, guys? It's your boy Mbumi and Co with Funds and Gelo, where investing meets more. So, guys, you know what time it is. You're gonna continue part two of stop loss trading using S&P 500 as a demonstration. Like I said, I'm very strong in indices, so I can get a few trades there and there because indices are really quick and unlike with currencies, it might take time and maybe I might have to stretch the video for longer. But if you still want the back testing for currencies, which I'll still do next, so please let me know, guys. Let me know in the comment section whether you are index trader or a currency trader, so that I can literally just make lessons that are literally suited for what you are doing. So without further waste of time, let's dive in. So I have part one on stop loss trading. You can go to my playlist. Back testing, it's under back testing. So I'm literally showing you guys how to use your stop loss trade and like once you're in profit and stuff like that. So without further waste of time, let's dive into it so we can cover at least a few more demonstrations. So we had market pushing up, right? The market pushed up. So let me just remove this because this is literally where we stopped off last time, where we stopped last time. Let me just get a glimpse of the market to remember what is currently happening at this particular point in time. Okay, we had that daily trend, the market broken out, is playing an above, and it's also playing above our daily resistance, right? So what we're gonna do from here is that we're going to cater for this key level right here. Then we can also cater for a zone right here. Can cater for a zone right here. So what this simply tells us is that we are on all-time high, right? We are on all-time high. So there's literally nothing for us to do on all-time high, but we can also add in a trend. Let's remove this brush stroke right here. Let's add in a new trend. The thing, this also I'm gonna do a lessons on how robots work and stuff like that. So if some of y'all are into robots and stuff like that, I'll show you the. Let me just show you guys how a robot works and how it does not work. So some people, when they program robots, right? Because I'm understanding how programming works. Like I developed the website, and I'm still adding more features to it to make it and to enhance it and stuff like that. So robots is that the way some people program the robots is that robots do not, the way that they program it is not to adapt with current movements in terms of the market, you know. So the robot will register the certain patterns that it's used to registering without keeping in mind that the market can change there and then. You see, like with us right now, we purely just using our skills. We're not robots, we're humans, so we understand that, okay, cool, the market is adapting to a new trend, so we can utilize that, and we can only do this through scales, guys. You see, we have three trends. We have the first trend, the second trend, and the third trend right here. So some robots, the way that they program, it's not that they don't work, is that the way that they program, they're not programmed in a way that it's quick and fast in order to to adapt to what the market is currently doing today. So because what the market is doing today can differ from what the market is doing tomorrow, as you can see right now. Like also my market breakdown, we can see that the market is ranging crazily up, but it's not like it moved too much, because there's a lot of volatility. So this is a new market that is happening right now. So we just need to adapt and see if it's gonna go back to moving the way that we currently used to. If it's not, we need to adapt our strategy to this. Normally, when the market moves this type of percentage, 3.99, guys, that's a really big move. But it's not big in terms of what the market is doing today. It's the type of moves that the market will do for 1 point something percent move, you know. So that's the thing, man. We just need to always keep adapting and stuff like that. So if the robot is not adapting, it cannot perform at its best, given that it was programmed. Maybe it was programmed last year and it won't adapt to this, you know, unless the person who programmed it in a way that it continuously adapts, which I believe that's what hedge funds are doing. That's why they're paying a lot for these robots to make sure that they trade exactly like them or even slightly better than them or something like that. But the ability to adapt is the key thing. So make sure you're using a robot, it is adaptable and stuff like that. But for those who are not using a robot, let's just dive into it. So I'll also cover latest breakdown. So everything is respecting setup. You cannot take entries because this volatility is not admiring to the way that we personally trade. So you want to see how it goes. You want to see how certain elements work and stuff like that, so that we can also adapt to the current market, because the market has been pushing 3% is a crazy move for 2024. Right now it is not a crazy move, but for without further waste of time, make sure to like, subscribe, and hit the notification bell. The goal is to reach this channel to 100 subscribers, and I want us to also get more subscribers, because the more subscribers I have, that's when I can actually do live trading. And if I do take a trade, I want to do it through live trading, because if I want to take a trade, then also have to record and post the video. It's gonna take time. So at the time that the video gets uploaded, the move is already gone to our direction, or it has flopped, whatever the reason might be during that time, you know. So live trading is the best thing is one of the things that I want to do, because yeah man, live trading, I just show you guys exactly, then I can get a lot of people watching, you know, and to we work together and try and just like get to a certain goal. So that's basically the goal, man. Let's make sure to like, subscribe, share if you know anybody who's trading, who's not familiar with our platform. Make sure to share this with them, so that, like I said, the more the merrier, the more we can do live trading sessions and stuff. So you can also comment on live chat at the exact same time, so then I can also cater for your conversations during that same time, and also be able to show you guys how I execute and all that stuff. So let's push for markets. We're on all-time high. There's literally nothing we can do. At this point, we want the market to break down here before we look for entries to the top, right? To come back and retest on the zone. So let's just see what the market does. We're on all-time high. We have nothing to go with right now. We have literally nothing to go with, because we need the market to push back down. Yeah, it's pushing back here, but if you can see at this area, there's no support area, so we're not gonna take those trades right there. Even though we take it, we don't know where to exit. If we would have taken it here, we're gonna exit here. It's too tight for us to exit here. That's something maybe scalpers can take advantage of, right? But we're not scalpers, guys. We don't scalp. We're day traders, and we're not scared to hold. So let's just see what the market does. The way the market pushed back to our support, our zone right here, right? So if the market pushes back, we test, we're going for prices until that region right there. So that's basically it with higher highs. That's literally, like, that's all we can do right now. Now let's just dive into the 30 minutes to see what the market does for me. If it continues breaking down, we're just gonna continue waiting. Let's see if we're getting proper retests. And also, guys, look, the market has, this is let's cater this too. So we had a correction right here, and we had correction right here, right? That's basically our correction. So if the market breaks in here, we'll be looking for market to maybe play this side, or the market to break, retest, and continue upwards, because it's a correction, so we're expecting it to either play in here and continue upwards. So if it's a fake correction, the market will spiral down. So we can conclude that we still buyers. Let's go to the 30-minute time frame to see if we can get any entries. So the market has broken back into this correction. Push prices, it's respecting the correction. So we're gonna be placing our first entries here, right? We're gonna be placing our first entries here. If we also add in trends, I don't think we should add our first entries. Just let me just see what the market is currently doing in terms of trends, because it can seem as if we're forming a new trend. So, we won't enter here. We prefer, let me just do this again. No, wait, we're not gonna be entering here. Let's just remove that for a bit, because we're having a trend here which is also giving us a correction, right? It's giving us a correction, so we're gonna remove. So we do know that the market is consolidating right here, right, in the 30 minutes, but let's just remove this so that we can have we don't want to have a lot of things going on, but just keep in mind that the market is correcting right there. So we're expecting prices to maybe push back down here. If it does come back here, we're looking for entries until the top there, right? That's basically what we're looking for. So let's just put in our key level based on the 4-hour time frame. Because if we enter here, the thing is that the market can push back down there. So we don't wanna, we wanna catch it perfectly. We rather just miss the trade than to enter not according to strategy or the structure of the market. So let's just remove this, zoom in. So that's our trend right there. So let me just show you something. So the market did what right now? Let me just also remove this because I don't know what that was. The market created an impulse. Now it's creating a correction. We're expecting impulses, right? But we want to enter in this correction, in this big correction correctly, so that we can capitalize on the impulse. Otherwise we might get trapped inside this correction, and that's not something we want to do. So we're just gonna push prices. As you can see, it is respecting this trend. It's going down even further. See guys, that's why we need to wait for literally perfect entries, otherwise we would have lost unnecessary profits there. So also concentration is one of the key elements that is needed besides psychology and technical ability. So in order to perfect your psychology and technical ability, you need also concentration. It also works hand in hand. So we're gonna just stretch this out there and adapt the top trend to this current trend right here. Can just place it there, fake out, market respected, it's okay. Now let's just see, there we go. I think we have in our entries here. let's just wait for perfect entries, man. Let's just wait for perfect entries. Move this away. And for my traders who are using pending orders, I'll teach you guys how to use pending orders. So far it's respecting the setup. There we go. There we go. Our first entry is at the retest. It broken out of the trend, retested perfectly. Let's see, it's a 90% move, right? So we have to risk at least 30 something percent. The reason why we're doing that is because we understand that the market can also break back into this trend. So if it does break back into this trend, we'll have a stop loss within this trend because this is a resistance right here. So we're just following rules in order to establish our entries. So let's look for a place where we can place in our stop losses. So we have this area right here. We will actually have this area, meaning that if the market, we have a mid zone right there. If the market breaks, retest, and goes above, we'll just break even because it's really tight on the stop loss. We'll just break even, meaning that we don't make nothing, we don't lose anything. Now let's just see what the market does. So it has broken above, retested, cool. So we're gonna have our stop loss just at break even, just below the zone here, like we did with the first entry, right? So let's just do the same thing here. There's our stop loss. Let's see what the market does from the stop loss onwards. It's respecting, and there we go. So that's how you actually win a risk-free trade. It did not break below our mid zone. We hit our stop loss. Like I said, our TP. Like I said, we used the same principle as we used here. But in this situation, the market spiked down, hit our stop loss, then it actually went to our direction, guys. You know. So we wouldn't have lost anything on this trade, and we wouldn't have lost anything on this trade. That's how you use stop loss to your benefit. So we're very deep in profit and we're on all-time high. Let's continue pushing prices. Let's continue pushing prices and see if we can maybe, this is all-time high, right? This is literally the all-time high. Is there any adjustments in terms of the trends? We can adjust our trends a bit just to cater for everything. So we can have a trend also going through here. Let me just use a line just to confirm. So adapting to what the market is doing is literally essential. So the market right now, it can push, you can literally push until the end of this trend, right? But we don't have anything indicating that the market has been here before, so you're just gonna wait and just see what the market does. So you're gonna move into a smaller time frame. Now let's see what the market does. Hopefully we can just get one more entry because we don't want to do this video too long. But as you can see, guys, you're using the same principle. If you haven't checked part 1, please go check part 1 out, guys, because it goes hand in hand with part 2, man. It literally does. So it can take time before we get our next entry. So we can see the market is correcting. It can literally break and push to the upside. There we go. Because why? We had an impulse correction, impulse, correction, and impulse, right? So now if the market decides to break back here, we can look for entries to the upside. So now it's just a waiting game. Let's see what the market does. It's doing another correction. It can also spike to the upside. There we go. It's a correction, right? Because we had a correction here. That's why I love indices. Are so simple to trade. Like literally, indices are not complicated. Like I said, you see, it finished off this new trend that we just placed in. That's why I'm saying adapting is one of the skills you need to learn. That's why most robots don't work, because they don't have the ability to adapt. They have the ability to process information, process patterns, but they don't have the ability to adapt. So if you can get a robot, or if a robot is able to adapt, that's when you can use a robot. But for us, we don't use robots in that sense. I don't use robots. I use my pure adaptability skills to be able to adapt and quickly. There we go. Because like a robot can only just do what it's programmed to do. So we're having a number of trends. Let's take out this trend. I don't know what this is doing here. There we go. So we have trends inside of trends inside of trends. The market is always moving in trends. Let me see if we can get one more inch. So what we're gonna do right now is we just want to add in a bit of key levels. So we're adding a key level here. Let's make it green because it changed, because we added a stop loss, right? Let's just add in a key level here just to see what's going on. If you're trading against the market, which, like I always say, it's not, I don't trade actually against the market, then you can just get in your sells from once it breaks this key level until the support right here. So we wanted to do exactly that, but we won't be taking sells to that area right there. We'll rather just wait for it to maybe break, retest, and go back here, and that's when we will go in for our buying opportunities, right? So the people who do trade against the market, they will capitalize on that, and if they can also see that this is a support, they can also capitalize on that. But I don't like literally trading against the market, so I won't be doing that if it does break back there. I don't like trading against the market, so it's respecting the resistance, right? It's showing us that we are catering correctly. If it did touch here, we would have went for buys. Just us would have went for those buys. So it's just pushing. Let's extend this trend to see what's going on. Let's extend this trend. Let's just adjust it to what the market is looking like now. So adapting, it is literally crucial. You need to adapt. You need to know when your trends are invalid and when your trends are still valid, so that you do not use outdated data for your entries. So right now we having a nice zone over here. So if the market gets back here, we're looking for entries to the upside, right? Let's see if we can maybe just get one more trade, man. Just one more trade. So this video must not literally just drag out. So let's just see if we can get one more trade. If not, then we'll just continue again, guys, and we'll just give you at least 3 more demonstrations on S&P 500, right? Before I'll just do currency demonstrations again. So there we go. This was a beautiful setup. This is a beautiful. We have market also correcting on the 1 hour trend line right here. So expecting it to push back until, let's just go to the 4 hours. Until there, those most touches right there. So let's see if we're getting entries on the 30 minutes. Let's wait for the retest. There we go. So we'll be swinging this 2% move. We'll be swinging that 2%. That's a big move right there. We only just have our stop loss below at a 55 because we have a trend, right? The market can literally just come back here and just dip, right? So we have a stop loss in place. If it breaks, we need an exit, we need a stop loss area. So let's identify where the market is creating the most touches, which is right about here. So this will be our last official trade for this setup until we continue. So right now we're in deep profits. Even if we do take an L right here, we'll still be in profit. So let's just see what the market does. Respecting it's, there we go. We can place in our stop loss right there. So another trade successful, stop loss and profit, meaning that this is a risk-free trade. So no losses, nothing like that. Risk-free trade. We can just settle down and just enjoy the rest of our day. If we lose, we're going out with a small win, which is also going to add on our previous win, meaning that we in even more deeper profits. So we're good, man. We are literally good. We don't care about what happens after this. So it's respecting the mid-level. Did it hit? Okay, hit our stop loss. We are good. We are literally good. Let's just see the outcome of this. Maybe it wants to break back down here, creating our W formation because we're on the support. The market might want to create a W, right? We want to create a W going upwards. So to see what happens next, be sure to tune in. If you made it to this far, you will see what happens next. This will be really interesting, very deep in profits. I'm gonna stop the video here. I don't wanna make it too long. We have the alert there. I'm saving it. It's saved. So we'll just continue from here from next time, guys. As you can see, guys, this is literally how you use a stop loss and profit. If you like this video, please like, subscribe, and also share. Like I said, I wanna also do live trading with you guys. So please invite more people who are also trend line traders and stuff like that, and teaching you guys how to trade with trend lines, the way that it will make you a lot of money perfectly and stuff like that. So thank you, guys. It's your boy Mbumi and Co with Funds and Gelo, where investing meets more.